All right. Thank you, everyone, for joining today's Webshort. Just so you know, again, we call them Webshorts because we do it every Monday, and we try to keep it short. And it's either a product or two that we're going to be talking about to just help you understand it and let you know what we can do and help you qualify a couple more loans. So today's Webshort is called No Minimum Credit Score on Conventional Loans and Down to a 620 Credit Score on High Balance or Superconforming Loans. Okay, so the program details are as follow. On conventional, there is no credit. There's no minimum credit score. Okay, with an LP or a DU approval, and that applies to all loans. So that applies to a cash out, a rate and term, and a purchase for investment properties, second homes, and primary residence. That can be for a 1 to 4 unit and a condo. So, for example, on this product, we have a 575 credit score, non-owner, 65 LTV, cash out. As long as you have an LP approval or a DU approval, you're good to go. And believe it or not, we see a bunch of these. So, just because your score is, maybe less than 620, may not mean that it might not go through. All right. So again, you can combine any of these. So my example here is a 575 cash out non-owner 4 unit. All right. Does anyone have any questions in regards to the conventional part of this? Now, we can get MI down to a 620 score without a problem. Once you go below 620, if it's a strong deal, we can always try to get an exception. So if you have a deal that you were trying to get done and it's falling apart, give us a buzz. We might be able to get it done if that was the case. But that's on conventional. So again, anyone have any questions in regards to that? We'll move on here. High balance, super conforming. This is a really great product for anyone that's in a high balance area. So we're going to go down to a 620 minimum credit score. And I hear someone saying that there's no audio. Hold on a sec. Let's see.
Jason, there's audio. Don't worry.
There is? Okay.
Yeah, you're all set. At least on the bridge, on the dialing in via phone,
right.
There's audio.
Okay. So hold on a sec. You must dial in. Okay, so on the high balance part, I think this is a fantastic program because you don't have to close that many of these loans to make a good amount of money. But we're going to go down to a 620 minimum credit score, and this is really going to be for LP. This is a Freddie Mac product. So, as long as you have an LP approval, we'll go down to a 620. So that's going to be the same as above, term and or purchase, investment, second home and primary residence, 1 to 4 units and or condos. So my example here is you have a 621's credit score, 57 LTV, 3 unit, non-owner, cash out with an LP approval, you're okay. So, it doesn't have to go down that low. I do have people say, well, the adjustments on something like that would be outrageous. Absolutely, but the guy's probably not getting this loan anywhere. So whatever the adjustments are, as long as it makes sense under QM and all that good stuff, you're good to go. But, forget about the 620 score. With this product, from what I see, the minimum score I've ever seen was from any investor was 660, okay? And that was on a rate and term, owner-occupied, 1 unit. Anything else is much. You normally see people with, advertising, maybe 680 on a rate and term, 1 unit. What else? Or you have, 720 or 740 or 760 for anything like a non-owner or a cash out, a non-owner. 4 unit, then you're looking at somewhere in the high 70s. or 700, excuse me. So, with all that said, this is a great product because you can just take all that from 680 down, and you can do that all, even 700 down, or 720, or 740, or 760 down, and now you can do anything that you can run through LP and get an approval on down to a 620. So if you market this program right, you really don't need that many hits to make a good amount of money. So we love the high balance superconforming program just for that alone. Anybody have any questions in regards to the conventional and the high balance?
Yeah, Jason, what about a gift of equity in the case of a purchase to get the LTV lower, or non-arm's length transaction like a son buying from a father, and we do a gift of equity to get the LTV like below 70 so we can get an approval? Are there any restrictions, or you say there's no overlays? Yeah, so there's no restrictions as far as the Freddie Mac guideline on that would be, or the Fannie Mae guideline on that would be. So, you're right though. Some lenders out there would restrict, like for instance, if just use an example, on a conventional file, if let's say the father wants to give a gift, and the son really has no money, let's say, but the father's putting down, he's giving him more than 20%. Well, if he's putting down more than 20% of that gift money, then the borrower doesn't need the 5% statutory investment. So to answer your question, we're going to follow Fannie Freddie's guidelines on that. This right here is that there's nothing special about it as far as any special guidelines to it. The specialty is no minimum credit score with an LP approval or DU approval conventional, or 620 with an LP approval for high balance. You're going to follow all the other guidelines and LTV requirements. Okay. All right. And there's a question that's from you, Todd, right? Gift of equity? Okay. Anybody else with any other questions? The marketing ideas on this, especially for purchase business, your realtors, possibly your debt pipeline, CPAs and accountants for something like this, where their clients were trying to get a loan and they were told that they couldn't. In the mails, email blasts, radio shows, ads, flyers, etc. So that's pretty much our Webshort today. Hopefully, if you guys have any questions in regards to trying to run these through, or if you don't have LP and you want to go over the credit scenario with me, I'll be more than happy to, or your AE, just have that verbal conversation with them, and send over the 1008, the 1003, and the credit report, and we can kind of look at it and give you an assessment if we think it has a shot of going through or not. So, all right, I want to give one more shot here. Any questions? All right. Well, thank you everyone for joining us today. This will be at some point later today. Thank you.